Hey tech enthusiasts, it's your host bringing you the Tuesday edition of Tech Stocks Daily. Buckle up because today we're diving into Apple's potential AI game changer that could turn Siri into the next big thing. Nvidia's jaw-dropping advancements and a share split that's got investors buzzing. Spotify's stock surge spurred by price hikes. And HashiCorp's groundbreaking AWS partnership and European expansion plans. Stay tuned. This episode is packed with insights and excitement you won't want to miss. Let's get started. Today, we're focusing on Apple, the tech giant that's got everyone buzzing, from Wall Street analysts to Siri herself. First up, the talk of the town. Apple is working on a major AI overhaul that could completely change the game. According to Gene Munster from Deepwater Asset Management, Apple is on the cusp of a paradigm shift with its virtual assistant Siri. Now, I know what you're thinking. Siri isn't exactly known for being the sharpest tool in the AI shed, but Munster believes that an upcoming partnership, possibly with OpenAI, could turn Siri into the Alexa killer we've all secretly wanted. If Apple nails this, it could be how 20% of the world first experiences advanced AI. The company is already gearing up for this monumental shift by developing a new chip architecture featuring a GPU for smartphones, expected to roll out in 2025. This tech leap could allow iPhones to run small language models directly on the device, making Siri not just smarter, but possibly less of a joke at parties. All eyes are on Apple's Worldwide Developers Conference set to kick off on June 10th, where this souped-up Siri might just be the belle of the AI ball. Just a heads up, investors, Munster says Apple stock tends to surge before these big events and dip right after. So, if you're riding the Apple stock roller coaster, buckle up. Shifting focus a bit, let's talk ETFs. Apple's performance has been kind of like that of the tortoise in the AI race, steady but seemingly slow. Despite other tech giants soaring, Apple's shares have climbed a modest 6.3% over the past year. But there's been a revival, thanks to a 52% increase in iPhone shipments in China. This renewed vigor has lifted Apple shares by nearly 11% over the last month, outperforming the S&P 500. And speaking of outperforming, how does Apple stack up against its competitors in the tech hardware industry? Pretty well, actually. Apple's price-to-earnings ratio is lower than the industry average, which some analysts interpret as a sign of undervaluation. Meanwhile, its return on equity blows the competition out of the water, thanks to efficient use of its capital. But it's not all sunshine and rainbows. Revenue growth has taken a hit, lagging behind industry rates. This might explain why even the venerable Warren Buffett has been trimming his stake in Apple. Concerns over a maturing iPhone market and a seemingly hesitant AI strategy might have prompted this move. Still, Apple remains a giant with strong profitability, robust cash flows, and a promising future in AI. Finally, let's address the elephant, gorilla in the room, Nvidia. Apple and Nvidia are essentially in a market cap face-off, with Nvidia closing in on the $3 trillion mark. While Nvidia rides the AI wave, Munster still bets on Apple to outperform in the next year. Why? Because the market just might be underestimating Apple's potential in the AI sphere. So whether you're an investor, an Apple fan, or just someone who's tired of Siri's questionable responses, keep your eyes peeled. Big changes are coming, and Apple might just redefine how we interact with technology once again. Today, we're diving into why Nvidia is buzzing hotter than a gaming PC on a summer's day. So, Nvidia continues to dominate the AI scene, and Mizuho analyst Vijay Rakesh has cranked up the hype levels to 11. Fresh off an event in Taiwan, Nvidia is ramping up for some epic quarters ahead. Let's break it down. First up, it's all about their Hopper platform and the Blackwell B100-200. But here's the kicker. The massive 3nm Rubin GPU, announced at Computex, is slated for 2026. Yep, 2026, so mark your calendars, folks. Nvidia's GB200 NVL72 full-rack solution is predicted to send its average selling price through the roof in 2026 and 2027. Imagine this, Nvidia might ship 2025K NVL racks by 2025, giving their current estimates a solid boost. And it gets juicier. 2026 and 2027 could see shipments between 25 to 30K racks, accounting for about 30% of all AI data center shipments. Cha-ching. But what's got everyone jittery with excitement? The forthcoming 10-to-1 share split slated for June 7th. This could be a golden ticket for retail investors, making Nvidia's stock more accessible and potentially adding more wind to the share's sales. Rakesh isn't holding back, raising his price target for Nvidia to a whopping $275, up from $180. His bullish stance hinges on Nvidia's continuous steamroll over the AI accelerator market and a total addressable market that's growing over 60% annually from 2023 through 2027. Those are some serious growth vibes. Revenue and EPS estimates? Oh, they're climbing too. For the July quarter, Rakesh is sticking with $28.2 billion in revenue and 6.27 EPS. However, he's upping the ante for fiscal 2025 from $150.4 billion in revenue and 25.70 EPS to $120.4 billion and 27.7 respectively. And it just keeps rising for 2026 and 2027. On the hardware front, we're getting the Rubin 3nm GPU and Vera CPU set for 2026 and 2027, which will support HBM4. Plus, they're doubling down on networking capabilities for InfiniBand, Spectrum-X, and NVLink. These developments will be catalysts not just for Nvidia, but for partners like ARM Holdings and Micron Technology as well. Need more icing on this cake? Nvidia has teamed up with Snowflake for a game-changing AI collaboration. However, we'll save those sweet details for our Snowflake segment. Lastly, it's not just Nvidia soaring into the AI stratosphere. Rakesh also gave a nod to advanced micro devices with its robust roadmap, MI325, 350, 400 lineup, and impressive gains in data center compute share. And Intel, oh yes, Intel, is also making moves with new AI PCs and processors. In summary, Nvidia is not just in the spotlight, it's owning the stage, the audience, and maybe even the concession stands. With share splits, cutting-edge tech, and sky-high projections, it's a thrilling time to be an Nvidia watcher. Stay tuned as this tech titan continues to blast through the AI landscape. Hey tech enthusiasts, buckle up because Spotify is all over the headlines today, and we've got some juicy details to dive into. First up, Spotify's stock performance over the last 5 years has got some tongues wagging. If you'd invested $100 in Spotify's stock back in the glory days, that modest investment would have bloomed into a hearty $229.17 today. That's a whopping 18.18% average annual return, outperforming the market by 5.41% annually. With a market cap of $63.9 billion, Spotify is doing pretty well for itself, right? This just goes to show you the magic of compounded returns. They can really make your investments sing. But hold your horses, because not all the news is sunny. There's a bit of drama in the options market. Big money investors are showing some mixed feelings about Spotify. They've made some whopping trades, 29 big ones to be exact, and while about 41% are feeling bullish, a concerning 48% are bearish. To translate that, think of it like a high-stakes poker game, where some players think Spotify is going to hit the jackpot, but others are betting on a potential downturn. These trades are hedging their bets in a price range between $200 and $400. If that's not keeping you on your toes, I don't know what will. Now, for the piece de resistance, Spotify's stock surge, and it's all thanks to their recent price hike. Wall Street has given Spotify a big thumbs up after they announced price increases for their US subscribers, sending the stock to a 3-year high. Spotify broke out of a flat base at a buy point of $319.30 and ended a regular session up 4.2% to $326.68. What's sparking this optimism? Spotify hiked their ad-free premium membership prices. The individual plan is up to $11.99 from $10.99. The couples plan increased to $16.99 from $14.99, and the family plan for up to 6 users is now $19.99 from $16.99. These increases are substantial, ranging from 9% to 18%. Analysts are buzzing about this move. Evercore ISI's Mark Mahaney praised Spotify's confidence, suggesting that churn will be minimal and users will stay loyal despite the hikes. On top of this, 2 Wall Street firms, Benchmark and JP Morgan, raised their price targets for Spotify. Deutsche Bank's Benjamin Black even set a target of $400, suggesting these price increases could significantly impact investors' views on Spotify's long-term profitability and gross margins. And here's a fun fact, Spotify's individual plan is now $1 pricier than Apple Music's. Talk about confidence, huh? Just to wrap this up with a little bow, Spotify is now securing its spot as one of the leading players in its industry, ending the first quarter with 239 million paying subscribers globally. It even ranks second out of 21 stocks in IBD's Computer Software Education and Media Industry Group, with an impressive IBD composite rating of 87 out of 99. So there you have it, folks. Spotify is making waves, whether through its historical stock performance, the intriguing activity in the options market, or the positive response to its recent price hike. Keep your eyes and ears on this one, because the music never stops with Spotify. Hey tech enthusiasts, today we're diving into the latest escapades of HashiCorp, the company putting the oomph in multi-cloud infrastructure. If you haven't heard, HashiCorp has been buzzing all over the tech world thanks to 2 major announcements. First up, HashiCorp has just inked a strategic collaboration agreement with Amazon Web Services. Yes, you heard that right. Over the next 5 years, HashiCorp and AWS will be teaming up to supercharge co-innovation, co-develop solutions, and customer programs. This means developers like you and me can expect a whole host of new tools and features designed to make cloud infrastructure and security management even more seamless. HashiCorp already has a solid track record with AWS, getting accolades left and right, including being named the AWS Security Partner of the Year in North America in 2022 and Global Collaboration Partner of the Year in 2023. This new partnership will see them co-developing comprehensive Terraform policies to tackle everything from security compliance to operational scalability. Simply put, this is fantastic news for anyone looking to speed up their cloud deployments and reduce implementation risk. Next, let's talk about HashiCorp's European expansion at HashiDays London. HashiCorp announced they're bringing their powerful HashiCorp Cloud platform to Europe, starting with HCP Terraform. This move aims to help enterprises across the continent attain higher operational maturity in the cloud. The forthcoming 2024 State of Cloud Strategy Survey already suggests that only 8% of organizations have high operational maturity, and a whopping 60% are struggling with a skilled staff shortage. HashiCorp's unified platform aims to provide the much-needed tools to help these enterprises streamline their infrastructure and security lifecycle management. This should enable organizations to run more efficient, cost-effective, and secure cloud operations. HashiDays isn't just a platform for announcements. it's also a spotlight for customer success stories. From London to Munich and Sydney, HashiDay's attendees are getting a front row seat to see how HashiCorp's solutions are transforming cloud programs globally. These gatherings aim to help developers and businesses better understand how to leverage HashiCorp's solutions to unlock their full potential while keeping cloud costs and risks in check. So, what do you think about HashiCorp's latest moves? Excited about the AWS partnership? Pumped for the European expansion of HCP? Dive into the comments below and let us know your thoughts. If you've got experiences or insights with HashiCorp's tools, we'd love to hear those too. Don't forget to like, share, and subscribe for more daily tech news updates. All right, tech aficionados, let's zero in on Apple today. Given the news, would I sell, buy, or hold Apple stock right now? Drumroll, please. I'd say hold. Here's why. Apple is gearing up for some groundbreaking updates, especially with its potential AI revamp that could put Siri back in the game. With a new chip architecture coming in 2025 and the buzz around a possible partnership with OpenAI, Apple is positioning itself for a significant technological leap. Plus, the Worldwide Developers Conference on June 10th could be a catalyst for short-term stock surges. Historically, Apple stock tends to rise before these events, only to dip a little right after. So, if you're looking for those short-term gains, you could quickly capitalize, but I'd advise caution. On the fundamentals, Apple stock has a mixed bag. Sure, it's been a bit of a tortoise in the AI race, but we've seen a 52% increase in iPhone shipments recently, and their returns on equity are stellar. However, revenue growth has been lagging, and even our pal Warren Buffett has trimmed his stake. Given these mixed signals, holding might be the smart play here. You don't want to miss out on the long-term potential if Apple nails its AI strategy, but it's a cautious play with its current growth pace and competitive market dynamics. Remember, folks, always do your own research before making any investment moves. And as always, stay tuned because the tech world never stops spinning. Wow, what a jam-packed day in the tech world. From Apple's AI ambitions and Nvidia's groundbreaking innovations to Spotify's strategic pricing moves and HashiCorp's game-changing AWS partnership, it's clear that the tech landscape is buzzing with excitement and opportunities. If you enjoyed today's deep dive, hit that like button, subscribe to the channel, and share it with your fellow tech enthusiasts. And don't forget to come back tomorrow for another thrilling update on all things tech. Stay tech savvy.